Good afternoon, my fellow traders. My name is Michalis. I am one of the market analysts here at HFM, and I'd like to welcome everybody to another video of Charts in Action, where we're going to be analyzing particularly the US dollar because it has had a lot of volatility, a lot of developments over the past 24 hours. I mean, if we look at the performance of the currency market across the board, the US dollar today is the worst performing currency, and it's actually seen more downturn volatility than Bitcoin, which is something which we rarely see more volatility on a traditional currency than on a cryptocurrency. So the US dollar, ladies and gentlemen, has had a lot of downward pressure, even though over the past 2 weeks approximately, the US dollar's performance has improved. Its downturn over the past 24 hours has definitely been eye-catching. And the reason that we are seeing the downturn is because over the past few days, we've had members of the Federal Open Market Committee speak to journalists and really sound extremely dovish, expecting further interest rate cuts in 2025. But what we have not seen so far is the chairman, the head of the Federal Reserve, give a dovish comment to journalists. At the moment, he's being very neutral on every single occasion that he has spoken on behalf of the Federal Reserve. Yesterday, he spoke again. It was the first time he sounded extremely dovish. He very clearly gave his support for further interest rate cuts, whereas previously he wasn't willing to do so. And it was the first time that he said the downturn risk from the employment sector outweighs the risks of inflation increasing. So that's a real concern for the Federal Reserve. We are aware of that. And because of that, we are likely to see more interest rate cuts. Now, if we look at the possibilities of interest rate cuts, previously we were seeing a possibility of 2 interest rate cuts being at 79%. So a 79% chance of 2 interest rate cuts in 2025. Now that has risen over the past 24 hours from 79% to a 95% possibility. So according to the Chicago Exchange, it's almost certain that the Federal Reserve will cut at the end of this month, and they will cut again by a further 25 basis points in December as well. Now, what effect has that had on the market? Of course, that's causing the US dollar to decline, but it's also causing gold prices to increase in value, and it's also causing the stock market to increase in value as well. Now, if we look at the performance of the currency market today, the best performing currency is the Japanese yen. So, of course, there's benefits of looking at the USDJPY because we have the best performing currency against the worst performing currency of the day. And also, it is one of the exchange rates which has one of the lowest spreads. Now, if we're looking at the US dollar against JPY, this is a 2-hour time frame. We, of course, had that decline in the Japanese yen because of the political ripple effect that we had from the new leader of one of the main parties in Japan, who's definitely somebody who wants to expand and should we say supports expansionary fiscal policy. So we got that bullish price gap. We saw the US dollar against the Japanese yen significantly increase in value, but since over the past few days, we've really seen that change. So we've now seen 2 lower highs, and we have also seen lower lows as well. Now, for the first time, we are trading below the 2 trend lines. We're trading below the 75 bar exponential moving average and trading below the 100 bar simple moving average as well. So that, for the very first time over the past few days, have seen the indication switch from a bullish bias to a bearish bias. So that's something extremely important. Now, when we're looking at the MACD, if we're looking at the MACD, the bars are below the signal line, and we're on the bearish side of the MACD as well. So that's also given us, in terms of momentum, given us a bearish indication. If we're looking at the RSI, the main thing we want to see that it's between 25 and 50. That also gives us an indication that the price will decline. But at the same time, we don't want to see any divergence, which could give us an indication that even though there is downward momentum, even though there is potentially the possibility that the price will decline, there's also a signal that there is the possibility that the price will retrace or correct upwards. We're not seeing divergence, so we have a clear indication from the RSI giving us a signal for bearish momentum. And also, if we're looking at the stochastic oscillator, that clearly is extremely low and downward facing as well. So we have indications that the price of the US dollar against Japanese yen will decrease in value. The only thing that traders may want to be cautious about is the current candlestick is a bullish candlestick, and also we are now coming towards the end of the Asian session. So we have to keep in mind the characteristics of the Japanese yen may potentially change. So what can we potentially do? We can switch to, for example, a 5-minute time frame. We could even switch to a slightly smaller time frame if we're looking at more short-term trading. And what traders may look to potentially do is look for bearish momentum to be regained. So then we have a concrete signal from indicators, and also a concrete signal from price action as well. So what traders may look to do is, for example, wait for the price to either break out of this area here, which is the most recent swing low, or the very clear and strongest support level, which is this level here. Now, traders may wait for that breakout to happen. So that to be the signal for where the price is going to see a downward indication. Also on this 3-minute time frame, which is very key as well, we're trading below the 200 bar simple moving average. So that very clearly also gives us an indication that the price potentially may decline. Now, the only issue here, ladies and gentlemen, is if we're going to wait for the breakout, we have to wait for a lot of volatility. We have to be patient. And also, we're trading at a very low level and at a support level in the short term. So what traders may look to do is just very simply say, instead of waiting for the breakout, I just want to see enough downward momentum in order to get an indication from price action that there is enough downward momentum to indicate that yes, this trend is going to continue. So rather than trade at the breakout, they may look to trade at 61% momentum. So 61% of the upward momentum losing its effect and being regained downwards, which is basically at this upper blue line. Now, some people may say, why 61%? Well, very clearly, because if we're looking at traditional technical analysis, up to 60% is potentially a retracement. Anything above 60% is out of that retracement zone. So that is why that level is extremely key. So we have two potential indications and areas there where traders may look to speculate downward price movement. Of course, if it is going to increase above the 200 bar simple moving average, then the indications have completely changed and no longer pointing towards the potential downturn for the short period anyway. So that's something that we of course can keep in mind, and that's going to solve the issue of the bullish candlestick that we're currently seeing on the 2-hour time frame. Now, the other issue that we mentioned that traders may want to be slightly cautious about is the fact that the Asian session has just now come to an end. So we've switched sessions, and of course the price characteristic of the Japanese yen tends to change. The Japanese yen tends to perform extremely well in the Asian session if there is fundamental factors supporting it, but then that can change in the other session. So if traders want to avoid this, what they can potentially do is look at the US dollar against Japanese yen, which you can see has more volatility and has more direction. This is already seen, we can see here, the volatility and movement in favor of the euro and against the Japanese yen. So if traders want to avoid that with the yen, then they of course have the option here with the euro against the US dollar, which also has an extremely low, if not the lowest spread in the market. We can see we're seeing bullish momentum, so we don't have to wait for that momentum to be seen. We're currently seeing it, and it's an active signal that potentially we may take into consideration. Again, we're trading very clearly above the 200 bar moving average. We're clearly seeing higher highs and higher lows. So just to recap, ladies and gentlemen, the reason why we're looking at the potential and the opportunity for the US dollar to decline, and the reason why it is declining, is because over the past few days, multiple members of the Federal Open Market Committee, one of the key outspoken members is Mr. Murray, for example, have taken a more dovish tone, mainly because of the risks within the employment sector. For the very first time, though, last night, the Federal Reserve Chairman, Jerome Powell, also supported interest rate cuts. That's the first time he switched from a neutral view to more of a dovish forward guidance. So that's very key as well. That's a big driver of the bearish volatility for the US dollar. Because of that, we're seeing gold increase in value, which is inverse correlated with the US dollar, pressures the US dollar further. What also pressures the US dollar further is because of that dovishness of the Federal Reserve, bond yields have significantly declined as well. So if we're looking at the 2-year bond yield, it's down 13 points. If we're looking at the 30-year bond yield, it's down 26 points. So that again pressures the US dollar. So this is why we're seeing the US dollar decline in value. We've looked at the potential for the Euro USD and the US dollar against the Japanese yen as well. The main thing is, of course, that we are seeing concrete signals and not conflicting signals. If we actually switch to the Euro USD on the 2-hour chart, we can again see something very similar. We can see, for example, here we're on the MACD, on the bullish side of the MACD, we're above the signal line. If we're looking at the RSI, we're between 50 and 75, to be precise, about 62. So it's an area indicating upward price movement, not high enough though to indicate that the price is overbought, nor are we seeing divergence. The crossover on the stochastic oscillator is also upwards as well. So we have here indications showing a switch in the outlook for the US dollar. Could be in the short term, could be in the medium term. Excuse me, that's something of course we'll continue to monitor. But for the meantime, we're seeing from these indications potential indications, potential price movements that the US dollar, of course, it is declining, it has declined, but that it potentially will continue to decline. So that's it for today, ladies and gentlemen. Hopefully you found today's video educational and informative. Of course, these videos are here for educational and informative purposes. It's not here in any way, shape or form to give direct investment advice or trading advice. How you trade and how you wish to view these indications is completely in your control. For the meantime, guys, enjoy the rest of your day, have a good afternoon, and we'll see you on our next analysis session. We also have a live analysis this afternoon at 12:30 GMT, which is going to be live on our YouTube channel and also on Twitter. That's it for today. Enjoy the rest of your afternoon. Goodbye.